What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 21st of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to talk about one of the biggest lies you're probably being told about Bitcoin and the crypto market at the moment. I want to talk about the biggest misconception that is being preached around that left a lot of people surprised when we dumped at around 53K, now down here towards around $51,000 for Bitcoin's price, and the reason why a lot of altcoins are getting hit just as hard here as well during this period of time. We got a lot to uncover here in today's video, and I hope you guys will, above all, if you like the video, consider dropping a like. It's a great way to support the content we put out here on this channel. And let's go ahead and kick off the rambling. Now, I want to preface by saying I'm not here to be bearish by any means. I'm not saying that Bitcoin is dumping. We've been neutral pretty much between a range of around 51K to around 53K for the past week, but I want to talk about why this rejection of 53K is important and why it's likely starting to play out here. A big thing we've been talking about in this channel is the ETF and the dynamic that starts to play when it comes to crypto markets. It obviously is a beneficial thing long-term for crypto, and we've seen that play out here for the greater part of 2023 and the initial part of 2024, with the rebound off of Bitcoin's 100-day moving average down here at around 38 to 39K. We had a nice sizable move here in pretty much less than a month here. Bear in mind that, guys, we saw Bitcoin from this corrective point here trend higher all the way up here for 37% move in 1 month. That's great. And that's a great rebound, and it bounced exactly off the 100-day we were talking about as a potential price point where both Bitcoin and altcoins could surge higher. And if you've been focused on stacks, if you've been focused on renders, some of the plays we've been talking about, some of those plays have more than doubled in that period of time if you focus on the right narratives. So I'm not here to be a perma bear by any means. I'm not here to get you guys to fear anything or even to say that you should short Bitcoin. But my point here is that to be surprised by a correction at this point is a little bit foolish. We should be expecting these things. And I only say that as a friend here. I don't mean to be insulting, guys, but we gotta step back and look at the long-term time frame. Sometimes it's easy to get caught looking at the 5-minute chart, looking at the headlines, and looking at all the short-term stuff, and not zooming out and realizing, wow, okay, we not only went up 37%, but even from the prior highs since the ETF here, we still climbed up around 10 to 11%. And Bitcoin is now a $1 trillion asset. So that's $100 billion, roughly speaking, from that period of time. Great price and valuation expansion here. Now, I want to talk, though, about why we're starting to see very few altcoins here. Plays, the ones of which we've talked about, like stacks or render holding up here in this market over the last 24 hours, as well as some other DePIN or AI plays like Coin and Fetch AI, whereas the overwhelming majority of cryptocurrencies here are in the red, and why Bitcoin itself is starting to dip as well. Why is it that we're starting to see a pretty heavy sell-off here over this last 24 hours in plays like Cardano or ADA, and plays like Optimism? We're seeing it in Matic as well. We see it in a whole range of different plays here. These are just some of the EVM compatible chains, but I could go down the list here and talk about a whole range of other cryptos stepping beyond that into alternative L1s. SUI-USD in this case down heavily over the last couple days from 190. Say as well, seeing a pretty heavy pullback here, one of its biggest ones since back here in January. So what gives here? Why are all these altcoins, especially Bitcoin, dropping when there's so much interest in the institutional ETF? And now with this institutional wave of capital, why aren't assets just going up into the moon, up to the right? Because I'm going to start off by addressing the first big lie misconception, and that is that there is an infinite amount of money, some ungodly amount of money that's just been sitting on the sidelines waiting to get into crypto. That's not true. All right. And if we consider even the amount we've seen in the inflows, which is definitely great, it's an impressive number, it's not bad by any means, it's not as sizable as people claim it to be. The billions of dollars that we've seen, even if we factor in for GBTC outflows, at the end of the day is a dent in the map when it comes to the amount of liquidity that sits in stablecoins. So I understand that definitely at the end of the day, we have seen the inflows continue to contribute to Bitcoin's upward pressure. That is definitely what's been driving it to a large extent. But at the same time, those inflows are much smaller in the grand scheme of things. Even in the short time it's been here, we have to consider the fact that it is much smaller than the available supply of stablecoin liquidity, which, mind you, has also been expanding during that period of time. So there is significance here in stablecoins. They still play a role in the market. It's not just a siloed window of institutional capital coming in. We need to watch and see whether or not, by this bi-weekly chart here with each and every one of these candles, are we continuing to see an expansion? Because last time, when we saw that stalling in the trend, that was your cue to start taking money off the table. So stablecoin liquidity still holds a lot of relevance. It's not just the ETF. But beyond that as well, right? You've probably heard me even talk over the last week or so that, hey, the ETF numbers have been pretty impressive over the past last 2 or 3 weeks. We really saw a trend shift there, whereas it was relatively neutral if you accounted for GBTC outflows. And now a lot of people are pinning this past week of price action, blaming Grayscale. Or more particularly, they're blaming Genesis, the parent company of the Grayscale entity, in this case, one of the subsidiaries of the company that created the GBTC product. They're blaming Genesis for essentially offloading some of their previously locked Bitcoin through the bankruptcy proceeding that they're going through right now. And you can see that there have been on-chain transactions, and definitely, I have no doubt that this is playing a role in some of that sell-side pressure. But it is not the reason things are slowing down here. The reason it's slowing down is because of two core reasons. Fundamental misconception number one that a lot of people don't understand is that when prices move higher here, more Bitcoin, long-term held Bitcoin, starts to move, likely towards exchanges, into the order books, increasing supply, right? As prices go higher, people, smart money, start to take profits. Now, I understand people would make the fair argument here that, if you're really a long-term investor, you just hold Bitcoin. I'm not here to debate that. I'm just saying that for shorter-term traders or swing traders, they start to put liquidity in the order books. So more Bitcoin that was held for the last year or more and being untouched and not really entering into the actively traded supply, that's likely hitting the order book. And that's causing additional sell-side pressure, likely market order sell-side pressure. So that stalls the acceleration of price growth. But beyond that as well, we need to just take a look at the ETF inflows here, because right now, as of yesterday, the numbers aren't looking too good. Now, people will probably tell you that it's the Grayscale GBTC outflows from Genesis that are causing this, but the GBTC outflows yesterday are pretty in line with what we've seen back over the last few weeks. A little over 2,000 to 3,000 Bitcoin, give or take, on most days, right? So that's not really the anomaly here. The important thing to point out here is the inflow numbers. We can see here the Rational Root puts a really great, nice visualization here together on some of these ETFs. And you can see that the numbers are less impressive than where they were back, say, a week ago. And I'm not here to say that this is the end all be all the ETF, but it's important to read these things, because if we don't, then we don't really get a fair view of the inflows. And we're just hoping that there's some magical wave of money coming in. We can see that, for example, ARK has practically 1/4 of what it was seeing back on Wednesday the 14th, or even still 1/3 of what it had back here on Thursday, or less than 1/5 of what it had back on Friday. You can see Fidelity is here as well, basically cut in half from around the amount that it's been normally getting, around 2,000, just a little bit above 3,000 here. And outside of that as well, you can also see here for the BlackRock ETF, which is really the big kind of whale at the end of the day, you can see that we had roughly around 3,000 the other day. And that's definitely lower, noticeably, from where we were back on Tuesday or Wednesday back in last week in February. So I'm not here to be a doomsdayer at the end of the day. But when I look at these total numbers, going from 6,500 new Bitcoin added, 9,100 Bitcoin, 6,300, and then I see days that are like 2,500, 2,600, that's not a drop in the bucket. That's a sizable difference. And as I've talked about again on this channel, guys, here, as you all know here, right, around 30K, we changed our narrative here. In this case, we get to the markets and the ETFs are going to come in, and we were watching for that dip opportunity around the 100-day. We saw it play out. It's continued to showcase strength. I'm trying to be fair here at the end of the day, but I'm also not going to get caught 2 steps behind and tell you guys that you need to absolutely FOMO in and that 100K, 200K, some people are calling $1 million is guaranteed. It's just not true. And we don't want to let that irrational exuberance get to us. Most of you who've been watching since 2017, you guys know irrational exuberance can lead to mass capitulation very quickly. And a lot of people getting burned. We don't want to get caught up in the exuberance of things. So this is my point here, to watch those ETF inflows. And a lot of people will tell you as well that you're missing the party to altcoins. And absolutely, there have been some great plays here over the past month, and let alone over the last year when, again, most people, including myself, were probably bearish on crypto back in 2013 from a macro perspective. But I have to tell you guys, if we really are expecting an altcoin cycle here in the next couple of months, I can tell you the altcoin season index, right, on the annualized basis, which is probably the most accurate version to track, is not showcasing that by any means. It's showcasing that we've potentially got the room for it, but we haven't really taken off yet. Only 24% out of the top 50 altcoins in the market are outperforming Bitcoin. There are very few exceptions here. Plays in which we've talked about as well as other ones. Stacks being one of the best performers. Say as well, some of these alternative L1s like Beam, Ordinal, as well, ordinals, that was another big play we've been talking about. So if we're being honest with ourselves, we're not in this euphoric phase in crypto where really a lot of the gains can be made during those short windows of time in altcoin cycles, which is where I get really interested, where I'm willing to deploy the capital because I know I've got the momentum coming in where I can make those trades and positions and make a lot of money in a short window of time and get out. But the main thing here is that, again, you can see that when those times come, right, back here in December and January, you start to see the acceleration in this indicator. And so far, since back in January, that's been slowing down here. It's difficult to find plays that are outpacing Bitcoin. So you need to be focused in on those Bitcoin-related narratives like we've talked about, other things that are strong like DPEN. There are very few plays that I think are really outpacing Bitcoin here and really leading the way forward. Not to mention as well, Total 3, again, another important dynamic here to consider is that, again, if we do have that ability to really expand long term, we've got a much further growth trajectory. We've only gone about 86% off of those lows way back here in January 2023. So this is, again, impressive results here for returns, but net overall, it's underperformed against Bitcoin. Bitcoin dominance has continued to grow. And unless you're really in the right place, buying into positions like Ethereum, buying into other legacy plays as well that are other alternative L1s or L2s, you might be getting caught behind, right? We can see here again that Ethereum had a weekly flip here on its Lux Algo support band, holding that green trend every single time it came in here. This was a buy the dip opportunity, but started to flip back in October 2023. And we've talked about this, how a lot of the EVM ecosystem, while everything might seem rosy on the surface right now, if you just look at dollar terms, overall, Ethereum has been severely outpaced by Bitcoin since back in December of 2021. And that's an important dynamic to keep in mind here, that you're probably better off being in Bitcoin or in more defensive or strong narratives in innovative sectors in the crypto space. Ethereum doesn't have too much going for it, in my opinion. And I think another thing that's fair to say is that Solana, which had a phenomenal run up here, no doubt about that, from the capitulative lows in June of 2023, not to mention the continued stagnation back in 2022 with the collapse of FTX. After setting this double bottom, it had a great rally, but right now we're spending a lot of time in that Lux Algo support band, and the more time it sits in there and doesn't start to rebound higher and start forming a trend, that tells me that this is likely well overdue for a substantial correction, probably down to prior support ranges of the past, like here around 14,000 or 140,000 sats for each SOL token. I'm looking more importantly for plays that either are showcasing strength right now or have the market cap multiple potential, that are diamonds in the rough, so to speak, that people aren't giving the necessary attention to now, that are solving for big issues in the crypto space, that have strong narratives and have a sense of moat in what they're doing. Stacks is a great example of that, because while there are maybe some other Bitcoin infrastructure plays, there's a plethora of L1 or L2s out there, no doubt about that, but projects that really have a well-flourishing ecosystem around building Bitcoin-related infrastructure, Stacks is one of the only ones out there. And the other thing to consider here is that for the L2 narrative, for L1s, all these alternative protocols, it's best to find plays that have some unique narrative beyond just scalability. One of those in which that I think you guys do need to keep on your radar here is Energy. Now, Energy has been a project we've talked about in a long time here on this channel. They're one of the few protocols that's actually fixing the issue of security. There are still smart contract exploits happening on a weekly basis, personalized attacks where people lose all their funds and there's no repercussions or help given to those users. Well, on Energy, there are no hacks. There are tons of checks and balances that prevent these things. And I think it's a big reason why since back in June of 2023, you've not only seen energy starting to tick up here in its dollar terms, but beyond that as well, it's one of the few plays that since then has been setting in higher lows and higher highs against Bitcoin and really making some sizable moves. I mean, check some of these candles here in price are just huge. And I think the reason for that is because energy itself is probably way oversold versus its fundamental value. It's starting to really pick up here. So at the end of the day, guys, I'm not telling you guys to FOMO into energy or anything. Definitely do your own research. Go out there, find a lot of plays like this out there, and prepare for altcoin season. Make sure you've got those bets there. If you do want to learn a bit more about energy, we did an interview with Tommy on the channel. I definitely recommend you guys consider checking that out. It was a really great conversation. But above all, you can just look at from a price action perspective. I like utilizing Lux out of the support band on these long-term timeframes. And we can see here that right now, it's signaling a clear sign here, not only in price action, but also in the clear support band here, both in Bitcoin and dollar terms, that this thing is likely to continue expanding higher. When we had this happen last time in dollar terms, we saw that energy expanded from around 91 cents all the way up here to a relative high around $4.60. So this is again giving us that precursor that the trend is likely shifting on a long-term time frame. And I look at this as well for a whole range of different plays out there in the market. We use this for stacks, we use it for render, we use it for a whole range of different cryptos, mainly on those core timeframes at the daily and weekly time frame for crypto. You can also use it as well when you're trading in equities, but I recommend using the weekly or monthly time frame for some of those plays. If you guys want to get access to Lux Algo, you can check it out down below in the description, risk-free for 30 days. And you can essentially try it on not only any market out there, but beyond that as well. There's a bunch of different indicators beyond just the signal and overlay indicator, which we utilize here on this channel and in my trading strategies. So I definitely recommend you guys check out the link down below in the description. But again, getting back here towards this topic here, guys, I know some of you might be saying, okay, Nick, like it's understandable, like maybe the ETF inflows slow down in the near term. We see, for example, some kind of correction in Bitcoin's price, either down into, say the support band here, or maybe the 4-hour, the daily time frame. We've grown quite extended here. Maybe we come down here, chop into this range here around 47K, make previous resistance, new support, right? So what gives? Like, do we just buy into stacks? Do we just go long into cryptos there? Well, I want to wait and see how price action reacts there. If we actually get a bounce off that range, and if that is as bad as the correction is going to get, because if we do get a break there, against the support band, it may very well mean that we're moving lower for some time. And the big thing I want you guys to know about as well, I'm definitely excited about stacks. Stacks is one of those plays where it's at the cusp of potentially making that really big move where it can multiply many times over in the event of a Bitcoin, a continuation in its price, right? If we really do enter into a full swing bull market. The point here I want to make is that stacks has rallied a good amount here. It's rallied about 619% from its bottom in August of 2023 to where it is now in February 2024. And that's very similar to the move we had in November 2022 here towards March of 2023. So we've seen, if we step out of the longer term time frame here, stacks does have that potential to make sizable moves and potentially be the play here for this cycle, the big narrative here. We've seen that it's made much larger moves in the grand scheme of things. So I'm not saying that this is an end-all be-all here, but it already has made a 1,300% move in regards to its performance since that low. So just make sure to heed on the side of caution when we're betting on these plays. If we don't see that inflow continue to stay strong here within Bitcoin, if we continue to see these kind of declines here and inflows don't start showing up at those lower ranges where smart money is buying on a dip, then that's likely a sign that the infinite wave of liquidity of institutional buyers who have just been waiting at the floodgates to buy Bitcoin is probably a narrative you're being sold on. And I only say that here just to keep expectations moderate, to kill FOMO to an extent, because we don't want to think with emotion. We want to think about best allocating our money. And some of you out there, rightfully so, followed price action a lot more in 2023 probably than I did. Some of you made some great returns. I'd hate to see you end up losing a lot of those returns. Paper returns aren't returns until you lock them in. In the case of Bitcoin, I think there's an argument maybe to be made there that your returns against the dollar, it may be something you don't want to realize. Depends on your outlook for the next 10, 20 years. But at the end of the day, guys, I'm just here to try to give you a bit of an alternative view from what a lot of people are telling you in the market. And I love Bitcoin, I love crypto to a large extent, but I think that at the end of the day, not expecting some corrections along the way, I think it's just going to leave you really baffled. It might leave you like potentially revenge trading or going out of your way to, sell into capitulation. And unfortunately, price may very well rebound from that point right when everyone's looking to sell and get out of their positions. When the time to do so is when no one is talking about it. But the early stage signs are showcasing themselves. So just keep that in mind here. Again, not saying that the long-term trend is dead, but it looks like we're ready for some degree of healthy correction. We'll see how it plays out. We'll continue to track those inflows from new ETF products and see whether or not they do continue. We're going to be tracking the broader performance of altcoins. We're going to be tracking stablecoin liquidity, all these good metrics, things of which you guys can also track on your own as well. But I hope you guys have a fantastic day wherever you are. Again, if you enjoyed this video, consider dropping a like. It's a great way to support the channel and the content we put out. And I want to mention one last thing here, which is that if you guys are looking to maximize your returns in crypto, one of the biggest things you got to be considering beyond getting the right altcoin or trading or long-term investing and dollar cost averaging, no matter what strategy or altcoins or cryptos you're interested in, if you're just all on Bitcoin or you're into a whole range of new narratives, definitely make sure that you have a tax advantage account. If you're in the United States, setting up a crypto IRA is probably one of the best things you can do to plan for retirement. If you basically set up a iTrust IRA, they're one of our partners here in this channel. I'll have a link down below in the description. You guys will not only get $100 when you sign up for an account, going through the registration process, but beyond that as well, the way it works is that essentially any types of events you conduct within that IRA account are non-taxable on the fiscal year. So essentially you can trade to your heart's desire, you can just be a long-term investor, it doesn't matter. You're not gonna have to file taxes on the trades and activities in that account each and every year. However, you only pay taxes at a much lower income tax bracket when you go into retirement later on when you're withdrawing from the account. So that's the really cool thing about an IRA. In this case, it's a retirement account that allows you to invest in a whole range of financial assets. In this case, iTrust Capital gives you exposure to a whole range of cryptos, commodities like silver and gold as well. So having that on the side, making contributions to it, and having some of your crypto portfolio there may be a good decision. Talk with your tax accountant about it. Talk with any financial advisor who you feel is qualified to do so. I'm just here to let you guys know that I really think iTrust Capital is one of the best providers in the market. They've been around the block for a long time, and we've been talking about them for the last couple of years. So I'll have a link down below in the description. Feel free to check them out as well as LuxAlgo, guys. Have a fantastic day wherever you are. Again, if you liked the video, consider dropping a like, and I'll see you guys right back here on Friday. Take care, everyone.